Policy Committee, MPC, of the Central Bank of Nigeria, CBN, held its 295th meeting on the 20th and 21st of May, 2024.
For the third time this year, CBN Governor Olayemi Cardoso announces the decision of the Monetary Policy Committee to hike interest rate in its bid to stabilize prices and moderate inflation.
The committee's decisions are as follows. 1. Raise the MPR by 150 basis points to 26.25% from 24.75%. 2. Retain the asymmetric corridor around the MPR to plus 100 to minus 300 basis points. 3. Retain the cash reserve ratio of deposit money banks at 45%. And 4. Retain the liquidity ratio at 30%.
The hike was expected since Mr. Cardoso had already indicated that it's a hawkish stance, even though inflationary pressures seem to be tapering. The fear is, however, the impact on the real sector, as the cost of funding to MSMEs, which contribute about 50% to the GDP, has increased even further.
The effect of this, which for me is dampening, would likely bring a contraction in GDP growth rate. And that means what we had as our outlook, first and foremost at the beginning of the year, and then at the beginning of the second quarter, that was in April, is going to have to be moderated looking forward. We may therefore see GDP growth rate not up to what we had projected. In our firm, we're looking at 3.74 for the year, but we are looking now at a shaving of maybe about 30-40 basis points from that, in which case we could be looking at something just a little above 3%. But if we now sustain this into the second half of the year, then we likely not see growth anywhere close to 3%.
On the other hand, there are some gains expected from this.
Hiking this rate at this level will attract investors naturally, I believe so. So that will naturally give us some elbow room when it comes to our reserves. But the question now becomes, how much of that is the central bank willing to put at the disposal to help defend the naira? Because in the end, every country defends their currency, whether you want to say it, whether you're using a reserve balance or you're not.
Finding a balance between boosting economic growth and taming inflation continues. And economists say it's easier to achieve if intentional steps to increase food supply, among other factors, are implemented.